Welcome to the Business Review, a daily program that delves into the latest economic stories in the financial market around the world. From currency affairs to technology stories, we bring you the best from around the world.
Brazilian stocks have plunged 12% on March 9th, on course for their biggest fall since 1998, and the central bank intervened twice in currency market to lift the real from a record low as the global wave of selling and volatility engulfed local markets. The benchmark Bovespa index fell 12%, its biggest one-day fall since October of 1998, and the seventh largest ever, with preferred shares in oil giant Petrobras recording their steepest ever decline for more than 30%. In the currency market, the central bank followed up a $3 billion spot market auction with a $465 million sale in the midday as the real slumped to a new record low just shy of 4.80 per dollar. The central bank's first spot market intervention since November of last year arrested the real's decline, but the currency still lost around 2.5% of its value and has now depreciated by more than 15% this year. The savage sell-off came after the Kingdom of Saudi Arabia decided to ramp up oil production as OPEC's supply cut agreement with Russia collapsed, sending ripples across global financial markets already panicking about the impact of the coronavirus outbreak.
Italy's government will further increase spending in a massive shock therapy to offset the economic impact of the coronavirus outbreak. Italy's Prime Minister Giuseppe Conte vowed a massive spending increase for his government to combat coronavirus in what he's calling a massive shock therapy against the outbreak. Italy, the hardest hit European country, saw the number of coronavirus cases jump 25% on March 8th, with the death toll reaching 366. In response, the government ordered a virtual lockdown across the north, including financial hub Milan. The unprecedented move hopes to limit the movement of some 16 million people, but only time will tell how effective this will really be. More than 110,000 people have been infected globally by the virus, and over 3,800 have died, according to a Reuters tally. This weekend alone saw the number of cases in the UK rise by 30% and France increase by around 500. Latin America also confirmed its first coronavirus-related death in Argentina on March 7th, while Albania, Bangladesh, and Paraguay joined the list of infected countries. Gatherings across the world have been cancelled or postponed as a result, including the South by Southwest Music Festival, the Saudi Games, and the Barcelona Marathon, to name a few. Financial markets have been thrown into turmoil with an oil price slump, adding to fears of a global recession, but there may be signs of easing where it all started. Mainland China on March 9th reported no new locally transmitted cases outside Hubei province for the second straight day, but officials warned people to remain vigilant as foreigners and Chinese nationals travel back from affected regions.
Global stock markets stumbled as disruptions to business from the spreading coronavirus epidemic worsened, stocking fears of a prolonged economic slowdown. European shares opened sharply lower, with level stocks bearing the brunt. The Pan-European Stock 600 index was down 3.4% in London, reaching its lowest level in more than 6 months, as did Germany's DAX. The DAX slid 3.5%. Britain's FTSE 100 fell 3.2%, and France's CAC 40 fell 3.7%. The MSCI All Country World Index, which tracks shares across 49 countries, was down 0.84%. Robert Halver, a Frankfurt markets expert, said Germany's industry was already being affected and would continue to be hard hit. Halver called for an urgent influx of money to be injected into the markets and for fiscal policies to focus on spending. After their worst weekly performance since the 2008 financial crisis, global stocks measured by the MSCI index are up 1.7% this week as policymakers provided stimulus to combat the economic effects of the virus. Yield on US Treasuries fell to record lows and Treasury futures jumped as investors increased bets the Federal Reserve will follow this week's surprise rate cut with further easing. The Fed made an emergency interest rate cut of 50 basis points earlier this week. The Bank of Canada and the Reserve Bank of Australia also cut rates, with investors expecting other major central banks to follow suit soon. Officials and companies in Britain, France, Italy, and the United States are struggling to deal with a steady rise in virus cases that have in some cases triggered corporate defaults, office evacuations, and panic buying of daily necessities. Money markets are pricing in another 25 basis point cut from the current 1% to 1.25% range at the next Fed meeting on March 18th and 19th, and a 50 basis point cut by April. Minneapolis Federal Reserve President Neil Kashkari said that the Fed could cut rates further if needed.
Shares in India's Yes Bank plunged 60% as panicky depositors rushed to withdraw funds after the central bank took control in a dramatic late-night move and limited withdrawals from the troubled lender. The shock move by the Reserve Bank of India followed months of steady deterioration in the financial position of the country's fifth largest private lender and growing concerns over governance. Shares of Yes Bank plunged as much as 85% to wipe out more than $1 billion of market value, marking the biggest intraday fall in an Indian blue-chip stock. The stock was down 60% after pouring losses, as thousands of customers rushed to pull out funds and tempers flared at overcrowded branches nationwide. Police deployed in some states to help control the crowds. Many business owners feared the central bank's move would hit their operations too, as the lender with 1,000 branches across India has many commercial clients. The RBI placed Yes Bank under a moratorium and said it would swiftly work on a revival plan. Responding to a query about the rescue plan for the bank, RBI Governor Shaktikanta Das said at an event, the commercial capital of Mumbai, that it will be done very swiftly. In a regulatory filing, State Bank of India, the largest state-run lender, said its board had given in-principle approval to explore an investment in Yes Bank. Yes Bank, struggling under a huge pile of bad debt, has battled for months to raise the capital it needs to stay above regulatory requirements. Since late last year, it had been trying to raise $2 billion in fresh capital and in February delayed its December quarter results.
This has been the Business Review, your daily dose of economy and technology stories around the globe. Tune in next time for more up-to-date developments in the financial market. This is Farah Al Hashim reporting from Paris for KTV2 for the program The Business Review.